Become your own central bank. Create a foundation that they can't take away from you with their lies and their contract. This is not the time to trust. This is the time to come together. And not only is the local community important, global community is critical, because this is also our opportunity to get redeemable gold, sound money back in the monetary system again.
Of a symptom and a signal of a new monetary system in which gold has a central role. Doesn't mean a gold-backed dollar, doesn't mean a gold-backed BRICS currency. It could mean a gold revaluation because of the certificates the U.S. have. It could mean gold as a clear part of the unit of account that the BRICS are using to net settle trades. Those are already happening. It could even mean gold at 5,000, 6,000, 7,000. I don't know. If you're trying to wait for a pullback to get into gold, you're going to be playing a dangerous game.
The collapse of trust in contractual paper promises is driving a global shift toward personal monetary sovereignty, where individuals must become their own central bank. With gold potentially targeting $5,000 to $7,000 per ounce, waiting for a market pullback is now a dangerous gamble against a system actively debasing itself. Lynette Zang, a vocal advocate for sound money and independent wealth preservation, joins forces with Matthew Piepenburg, partner at Matterhorn Asset Management, to deconstruct this pivotal transition. They argue that gold is reclaiming its central role not merely as an investment, but as the foundational unit of account for a new financial architecture. Whether through the potential revaluation of U.S. gold certificates to address the debt or through the BRICS alliance using the metal for net trade settlement, the signals are unambiguous. The speakers warn that the global community is moving toward redeemable sound money, and failing to participate now means remaining trapped in a system of lies and contracts that is rapidly losing its legitimacy. Now, we present the clips from Lynette Zang and Matthew Piepenburg's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I hope you can see how important it is for you to create your own insurance network by having a foundation of sound money. That's what our strategy is all about. But you also create that independence, and you do that with the mantra and coming together, local community, making sure that you have surety, food, water, energy, security, barterability, wealth preservation, community pieces, critical, as well as shelf. Become your own central bank. Create a foundation they can't take away from you with their lies and their contract. This is not the time. This is the time together. Not only is the local community important, that global community is critical, because this is also our opportunity to get redeemable gold, sound money back in the monetary system again and take our power back. No, it's not. Freedom is not. Ethics are not. They are critical. And this is the time to. So I task every single one watching this to look and say to yourself, and if not now, when? Because one person doesn't, but 3% of the global population voting for sound money back in the system, and you can do it just by converting your garbage fiat into sound money. Now we can make positive for the world, sure, for the current generations and all those yet have. That is our obligation, is to leave this world in a better place than we found. I know that, not one doubt in my mind. Together we do. And
because of the manipulations and because of these kind of mechanizations, could silver be dramatically retraced? Yes. But if you're holding these assets, these monetary metals for the right reason, and you're thinking longer term, especially with gold, and we can talk about silver, but you're going to have a little more courage through the highs and lows. There obviously will be retracements, especially if there's a market mean reversion. This immortal stock market in the U.S., will it ever mean revert? Will it always be too big to fail and subsidized by the Fed? I don't know. I still believe in mean reversion, and Bob Farrell and Charlie McKay and Ben Graham. I think I'm not alone. I think Ray Dalio, Druckenmuller, we can't time it. We just see a bubble. If there's a market mean reversion, could we see a sell-off in gold? Yes. But a pullback from what price? Gold at 5,000, 6,000, 7,000? I don't know. If you're trying to wait for a pullback to get into gold, you're going to be playing a dangerous game. I had a very important and necessary debate with someone who saw a retracement earlier in the year when gold was at 2,800. Many people might have thought, well, I'm going to wait. But it didn't retrace 30%. And if it retraced even 30% from today, it'd still be better to have bought it earlier in the year. So I'm saying I do not and cannot time when or how much the retracement will be. I will certainly tell you that gold will have retracements and silver. If you're holding it longer term, I think you should be very careful about trying to time your entrance. Timing an entrance is very hard. If you're holding it for 10 or 15 years, at least, which is what myself and our clients and Egon has been doing for decades when he bought at 300. He's never talked about the price. He's just saving in it. If you're thinking generational wealth, if you're thinking wealth preservation, if you want to stay outside of the banking system and save in an asset that holds its value more than a melting ice cube, yes, it's painful to pay at these higher prices. I think 10, 15 years from now, the prices will be much higher in fiat terms. And so I'm not trying to not answer the question. I don't know the price target for 2026. I do think 20 years out like Egon does, and I just would rather own or measure my wealth in something that holds its value more than a paper currency. But I will say, I think 2026 is already showing the same things we saw in 2025. Desperation, higher debt, and therefore more currency debasement. I think QE, which started at the Fed, it was QE that started at the Fed in December, will get exponentially higher. I think the Fed's balance sheet will get exponentially higher. I think the purchasing power of the world reserve currency will get exponentially weaker. And so gold should track that directly by going up and to the right while the dollar goes down and to the left. But again, we don't know in January of 2026 if there is a war. Wars can be very disruptive. It can be very good for gold, but it can be very good for markets. It can be different for yields. There are things we can't predict in the near term. As Hemingway warned, when you're in this much debt, you debase the currency and you go to war. We do see more war drums and rumors of war and talk of war. I cannot predict that. You can wake up like you did in August of 1971, have an announcement and the whole world changes on the dollar. You can wake up like 9/11 and the whole world changes because of an event in New York. You can wake up in 2020 and be locked down in your house because of a virus. There are things that can affect headlines and movements in intervening years. But my strong belief, and this is the belief of all of us at Von Greyers and our clients, is we know the longer term direction of gold and silver because we know the shorter term or the longer term direction of fiat money. This is the end of a fiat paper money system. And that's how you have to look at it. If you're looking as an investor to time an entry and exit, I'm not the person to ask. Nobody on our team really is. We do look at technicals. We do look at the fundamentals, but we're looking 20 years out. So it's a very different expertise. I will say I don't know many traders in the commodity space in general or the precious metal space in particular who've done a very good job of it, even the experts. When you're trying to trade a metal, that's a very different beast than recognizing it as a preservation asset, as a store of value, as a tier one strategic reserve asset. So that's a entirely different mentality and profile and decision-making process. I do fear that many people think they've missed gold and silver. It's too high and they won't get any now. And I think that's a mistake. But they can only get what they can afford, right? And so it's getting harder and harder to get affordable metals. Even silver is getting more unaffordable. Silver is much more volatile. It's a much bigger conversation, but you can still afford some of that. But know why you're owning these metals before you do it and know what you can afford. Don't look at silver as a trade, and certainly don't look at gold as just an in-out trade. You have to see it as a better store of value than the whatever currency you measure your checking account or your portfolio or your wealth with. That's been our message for decades, and it hasn't changed. Silver does reward extravagantly, but infrequently, but it's also more volatile. And in that particular case, you do need to look at, I'll just say in simple terms, don't look at the dollar or euro or yen or yuan price of silver. Look at the gold-silver ratio. Traditionally, it can go down to as low as 30, but you got to think about what's your ratio to get out, because silver can break hearts. And as Egon has said, it's not for widows and orphans. It's much more volatile because of its dual purpose role. It does move a lot faster in a bull market, but it can also fall faster. And you have to be a little more careful about picking your entry and exit with silver than gold. Gold, I just say you buy it, don't look at the price, and just keep going with your life.
The concept of becoming your own central bank represents a critical shift toward monetary sovereignty, requiring individuals to build a personal insurance network independent of institutional lies and contracts. This strategy goes beyond mere asset allocation, emphasizing the need to secure local community support and tangible essentials, food, water, and energy, to withstand the collapse of the fiat paradigm. Financial analysis warns that attempting to time a market entry is a dangerous game, especially with gold poised to potentially target $5,000, $6,000, or even $7,000 per ounce. The economic landscape of 2026 is accelerating the trends of the previous year, defined by exponential balance sheet expansion and the looming threat of conflict, a historic precursor to currency debasement. Investors are advised to hold precious metals for a 10 to 15-year horizon, treating them as Tier 1 reserve assets rather than speculative trades. While silver has the capacity to reward extravagantly, its volatility contrasts with gold's steady role as the antidote to a melting ice cube currency, urging a transfer of wealth out of the banking system before purchasing power evaporates completely. Let's get back to the interview.
Of a symptom and a signal of a new monetary system in which gold is a central role. Doesn't mean a gold-backed dollar, doesn't mean a gold-backed BRICS currency. It could mean a gold revaluation because of the certificates the U.S. have. It could mean gold as a clear part of the unit of account that the BRICS are using to net settle trades. Those are already happening. It could even mean gold. The COMEX is not a place to store gold. It's a place to manipulate the gold price. And but it's legalized price fixing. The COMEX has for every, it's got a 96% leverage short against the gold price every morning. 4% gold, 96% paper gold. And they get up every morning and a handful of LBMA banks lever paper shorts against the actual price of gold. So that keeps the gold price controlled. It's been doing that since the 70s. Gold was intentionally manipulated downward. There's a lot of reasons for that, mainly because gold is a middle finger to the dollar. So they had to keep it down. That was a deliberate policy. That worked as long as there was enough gold and silver on these exchanges to then lever short. What happened in 2025, we saw it in the silver market and in the gold market, is that the exchanges literally didn't have enough physical gold and silver available to lever. There was a massive exporting of the gold from, normally, you saw, I think it was in October, my whole career, the COMEX saw 1% free float or standing for delivery. The gold just stayed there and kept being levered. In 2025, we saw in the summer 100% standing for delivery. That's extraordinary. That's a huge headline. The gold was just leaving the COMEX as fast as it could come in. So the ability to short and manipulate it got weaker. The same thing happened in the silver markets in 2025. They literally seized up. There just wasn't enough silver in London to make delivery. It's supposed to be a cash and carry exchange. They blamed it on the weight of silver, truckers not being available, supplies. No, it was just the counterparties on the COMEX and the LBMA markets wanted their physical gold in their own hands now, because gold and silver are so much more important going forward than they were in the last 50 years because of all the changes we've talked about. So with not enough physical metal, gold or silver, I'm simplifying a lot here, on these exchanges, the game of manipulating the price down gets harder for them to play. So free price discovery gets easier for gold and silver. As they're running out of these actual, in the case of silver, if there's less silver actually available, I think the available global free float available silver for delivery in the world was like 38. It was so minuscule, billion. It was nothing. So there was nothing to manipulate. So what did the silver markets try to do? In December 12th, they raised the margin costs. And again, I don't want to get too wonky what that means for people who know a lot about the COMEX and people who know nothing. But what that meant is if you're going to play the silver game on the COMEX overnight at Friday at 2 a.m., they said, we're just going to jack up the price to do that, to play in this game. And a lot of speculators in the COMEX, usually the shadow bankers, the hedge funds, etc., well, they didn't have the money to pay for that margin hike, that buy-in and the casino. So the system automatically sells them out at price. They just sell them out. So then you get a massive selling of silver when they're forced out because of these margin hikes. When there's a massive sell-off in silver, that pushes the silver price down. That was the intention. What happened to the chagrin of the market manipulators is that a lot of others, the Teslas of the world, the Samsungs of the world, when they saw that manipulation down, very short, didn't last long, when they saw the sale price on silver, they didn't panic. They bought more of it because they need it for industrial uses too. So the game to manipulate the price down on silver, to buy time and to push the price down, failed in December. Now they're trying to raise margins again and again. They did that in 1980. They did that in other times. And it was eventually successful. I think the world's very different today because of the demand industrial and monetarily for these metals. Doesn't mean I know everything, But I think that COMEX and LBMA market is facing much bigger headwinds because the demand for those metals is so much higher than their ability to manipulate. There are other tricks they can do besides just increasing the buy-in for the casino, for the poker game. The other trick is they can do limit orders. Just say you can only buy so much silver, and that's it. And that's limit orders. That also tries to keep the silver price from ripping too fast. And the most desperate act they can do is make it a sell-only exchange. You can only sell silver to keep the price down. But again, I think, and again, we're all kind of journeying this together. I think if they go to that nuclear option, then I think the world's just going to say, you know what? I'd rather go to an exchange in St. Petersburg or Shanghai if London and New York are playing these games. It's what I would do. And the question is, will Shanghai and St. Petersburg give fair exchange, fair price discovery on these metals than London or New York? These are all things none of us know for certain. What we do know is in 2025, the exchanges in London and New York literally didn't have the available metal to manipulate it like they could for decades prior. That is a major sign that I think, again, whatever the sophistication level is, again, many of your viewers may know the COMEX fluently, and some have no idea. Most don't because they're not supposed to. Like the Fed, like quantitative easing, like derivatives, like swaps, all of this is meant to be so confusing that you don't want to think about it. And I want to make it simple by just saying it was legalized price manipulation in New York and London by a handful of big banks in bed with the BIS, and they've been doing it for decades. And everyone on the street knows it. It's an insider trade. Peter Umbro wrote a great WikiLeaks thing. He admitted he was one of the guys that did this. That worked as long as they had the gold and silver there, and as long as they were unregulated, that game went on for decades. What we saw in 2025 was a watershed moment on these exchanges. And again, most people don't know what to make of it because up until 8 months ago, no one even knew what the COMEX was. And then it started making headlines. So it's a very important question. I'm simplifying a lot, but the COMEX and the LBMA exchange in London is not what it was 5 years ago, 4 decades ago. It's changed dramatically because the demand for the physical metals is so much stronger than the churn and burn price fixing that they'd been doing for years. And they're losing some of their teeth. They're losing some of their fangs. They're losing some of their nails. They don't have the power they used to do. That has massive ramifications. It doesn't mean like any army that's losing, they're not going to keep fighting. It doesn't mean that manipulations won't continue. And it doesn't mean I can predict what Shanghai or St. Petersburg are going to do on their exchanges. If I were them, I would offer a fair price discovery for gold and silver in the East than in the West and make the market move that way. I don't know if they will. Russia and China have their own interests in trying to control gold and silver as well, as they're trying to stack as much as they can. In the end, he who has the most gold will win this game. And to this point, based on audits and World Gold Council reports, no one really knows who has the most gold, including Russia, including China, including the US. We don't really know. There's no real audit, although that was promised. So there's so many moving parts, Patrick, so many moving parts. But I think the takeaway is gold and silver are in much higher demand. COMEX in London exchanges are losing a lot of their teeth. And the reason that they're losing their teeth is because those metals are in demand, and they're in demand because they're better stores of value than paper money. And that is not a gold bug apology. That's a universally understood fact these days. So we're well past gold versus the Dow. We're well past gold versus Bitcoin. We're well past bubbles and bears and whether it's a bull or bear trend. This is more than a bull trend. This is a structural turning point in our monetary system. And I can't emphasize that enough.
The decades-long era of legalized price fixing via the COMEX is facing a catastrophic failure as the physical leverage that sustained it evaporates. For years, bullion banks used a 96% paper-to-physical ratio to suppress gold prices, effectively managing the metal to protect the dollar. However, 2025 marked a watershed moment when this mechanism broke down. With 100% of contracts standing for delivery, the exchanges ran out of metal to use as collateral. Attempts to quell the rally through margin hikes backfired, as industrial giants like Tesla and Samsung absorbed the sell-off, proving that real demand now outweighs paper games. As Western exchanges lose their ability to dictate prices through derivatives, this transition signals a permanent structural shift where the casino rules of London and New York no longer apply, and power returns to those who hold the physical asset rather than the paper promise. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.